Hey everyone, what's going on? Hope you're having a great day so far. Welcome to another video. So, this one is going to be a very impromptu, informal, casual lecture on a topic that is highly popularized within the ICT space. And I get a lot of questions about this, so I'm just going to lay it all out in the open and share the way that I use SMT. So, most of you know, if you've studied ICT, you understand that SMT is essentially a Kraken correlation between two correlated or inversely correlated assets. For example, let's say we have NQ on the left and we have ES on the right. Seeing that NQ takes this swing low and ES, does not, that is SMT, or otherwise known as smart money technique, smart money tool. I like to call it smart money time because often it tells me when the SMR is happening, which I will get into. So it's a very simple layperson explanation of what SMT is. Now, why is it important? Well, if we understand that if NQ and the E-mini S&P or ES are correlated assets, one would anticipate and expect that if they are correlated, they should both not take specific highs and lows. Now, if one does and one doesn't, creating SMT, what about that is significant? Well, if you, like myself, are under the impression that the market is not based on randomness, it's not based on buying and selling pressure. In fact, it is based on and ran by an algorithm. And there are people in this game who are a lot smarter and have a lot deeper pockets than us, who tend to drive market price a little bit more than we do. I believe that seeing a Kraken correlation like this lets me know that there is smart money operating at this specific level highlighted or annotated by this orange line. This tells me that maybe we have smart money operating at this low to order pair with existing sell side liquidity or sell stops. Anybody that is long at this low is going to have their stop loss below this low. And as we know, deep pockets cannot get into the market unless there is purges on liquidity. So seeing this liquidity purge, but failing to see it on ES, tells us that smart money is operating in and around this area. I could go on and on about that, but like I said, I want this to be a very casual, impromptu stream. I may provide some more explanations on that in the future, but for now, this should suffice. It means to me that smart money is operating here and that we should anticipate a reaction or watch for a reaction, okay? Now, topic is SMT. The agenda is going to be the types of SMT that I use, as well as higher time frame and lower time frame examples, because this is a fractal concept, okay? It's a fractal tool that we can use across all time frames. So without further ado, let's just get right into it. So, you know what SMT is? Let's talk about the types of SMT that I use. Now, there are several types of SMT. I use 3, okay? They often interchange with one another, but their characteristics do remain a little bit different across the 3. The first type of SMT that I utilize is going to be external range SMT. Now, external range, I'll just put in external range liquidity SMT. Now, external range liquidity SMT, in order to know what that is, you need to know what external range liquidity is. Now, external range liquidity is going to be liquidity in the form of old highs and old lows. Okay, so what's that going to look like on a schematic basis? Well, going to be exactly the example I drew earlier. We'll use ES and then Q as an example again. One takes external range liquidity. This could be in the form of a previous daily low, a previous weekly low, a previous session low, whatever time-based liquidity you so desire to use. That will be characterized as external range liquidity SMT. Okay, so we'll tuck that up here. The second type of SMT that I will use is internal range liquidity SMT. Now, in order to understand what internal range liquidity SMT is, we must understand what internal range liquidity is, right? So, internal range liquidity is essentially going to be inefficiencies in the marketplace, okay? Now, let's say that we are going to, let's draw out a schematic of a impulse or a buy impulse or a buy trend, okay? We are going to have just a series of higher highs and higher lows, okay? What the market is going to do is it is going to, when it is trending, the market will trade above external range liquidity and then retrace to internal range liquidity. Now, internal range liquidity is in the form of fair value gaps. You could also use liquidity voids, volume imbalances, things like that. An inefficient area of price action, meaning in a buy program, if there is an internal range liquidity objective, it is meaning that it is inefficient in sell side delivery and it's imbalanced in buy side delivery, otherwise known as a BISI, right? Buy side imbalance, sell side inefficiency. So the market will tend to balance out this price range before seeking higher prices, trading above external range liquidity. Again, leaving an inefficiency again, right? Now, that is what internal range liquidity is. It is in the form of fair value gaps and other inefficiencies like liquidity voids, volume imbalances, things like that. I primarily just use fair value gaps. Now the SMT, let's clone this. The SMT, of course, will be if NQ, let's say, engages with the BISI and ES fails to. That is going to be SMT with internal range liquidity. And you'll see examples of this, don't worry. I'm just getting a point across in a very simple manner through schematics. So one engages with the inefficiency and the other fails to. Right? That is the second type. Now the third type is going to be what I call consecutive candle SMT, okay? Consecutive candle SMT, and I use it on a minimum 15-minute basis, okay? So what that means is, let's say we have the 9 a.m. candle, and then we have the 10 a.m. candle, and it flips bearish. This is NQ. We observe NQ taking the 9 a.m. high. And then on ES, we will see it fail to take that high, marking consecutive candle SMTs or SMT between 9 a.m. and 10 a.m. Okay. Now, why is this important? Why do I use consecutive candle SMT? Seems like a farce. I get it. What matters is what's happening on the lower time frame. Okay. On the lower time frame, there is a specific piece of price action going on in here that I can identify and utilize to my advantage. Okay. And it is on the topic of institutional swing points. Now, this is from core content. This is not my own findings. I am just an avid studier, avid student of ICT, and I studied core content, and this is what really resonated with me. Now, institutional swing points. If you don't know what they are, I believe it's core content month 5, but institutional swing points are the only way a market can reverse, in my opinion. You can have other types of reversals, but this one is the cleanest and gives the best probability setups. Now, there are 2 ways that a market can reverse. You can have, for a bearish example, at highs, you will have a breaker formation in the series of a swing high, swing low, higher swing high, and a lower swing low, marking a breaker block. Or you may have a swing high, swing low, lower swing high, leaving a mitigation block before we reverse. Now, what this means from a consecutive candle SMT basis is, let's say this is NQ and this is ES. This high printed at, say, 9:45, and this high printed at 10 o'clock, and then this high on ES printed at 9:45 and then at 10 o'clock. You are observing consecutive candle SMT on a lower time frame, and you are witnessing the market printing institutional swing points right in front of you on a lower time frame. That is the importance of SMT on a consecutive candle basis, right? I could get into some open, high, low, close logic as well, but that will probably be for another video because I want to stay on topic. Now, if that is clear to you of what the 3 types of SMT I use are, let's dive into some examples, okay? Now, you might notice this is the previous price action on the NQZ 2024 contract. Looks a little bit like a dumpster fire, does it not? But these setups involve SMT. All of these green dots, these are just a few of the setups that have formed and gave really clean, high probability setups. Okay, and there are the 3 types of SMT in all of these. At least one type of the 3 in all of these, okay? Let's start with this one. All right, this will be not just one type, but 2 types of SMT, okay? And you can frame a short-term setup or a long-term setup on this, because as I mentioned, you can use low time frame and high time frame logic to get into trades like this with SMT, okay? So here we have Tuesday forming a high and a low. And we have this engineered liquidity above here. These are relative equal highs, right? Pretty obvious relative equal highs. We know the market does not like those, right? On Wednesday, we see at 10 a.m., rather 9 a.m., NQ trades below the previous daily low. Now let's look to see where the SMT is. Here we can see ES fails to reach the previous daily low. At the same time that NQ is reaching it. So this is going to be external range liquidity SMT in the form of a previous daily low, right? And we've already marked up. We have these relative equal highs here. We have this inefficiency that is yet to be traded into. So we could frame a drawn liquidity. And we also have relative equal highs here on a fractal basis if you want to trade an intraday scalp. Okay, so there's one type of SMT, 9 a.m., previous daily low SMT. Now look what happens at 10 a.m. Here we have NQ taking the 9 a.m. low, and we have ES failing to take the 9 a.m. low. This is going to be consecutive candle SMT. Now you might be wondering, does seeing two different types of SMT within one trade idea boost probabilities? The answer is, in short, yes. So we have external range liquidity SMT and we have consecutive candle SMT. Now let's drop to a lower time frame and visualize it, okay? First, let's go back so I can go to replay mode so I'm not scrolling. The low of the 9 a.m. candle formed at 9:57. And then the low of the 10 a.m. candle formed at 10:01. Now, we want to find a breaker block, okay, that institutional swing point. You could use this up close candle here. You could also use this one as well, either or. They are both breaker blocks. I would lean towards this one because it is a beefier candle. But to each their own. We'll use this one for this example here. And we can visualize the SMT that we are seeing, right? With ES. Now, it may not show me. My compare tool has been having attitude problems. So let me show you October 16th. What we see. Here we are. Here's the 9 a.m. low. Here's the previous daily low. And you can see that we do not have a breaker block. We have a mitigation block. And we have the observing SMT at 10:01. Right? I can't compare, but you get the idea. And then the result, you wait for confirmation above the breaker block, and then you take the trade. You can trade it for a short-term scalp, which would yield you pretty decent R/R. If you take it to maybe this inefficiency, you're up above that in that 2R territory. Prior to this high being formed, SMT gets formed with ES because you can see ES actually takes these highs here from the AM session and Q fails to. So as much as we use SMT to get into a trade, we use SMT to get out of one as well on an intraday basis. But if you have a higher time frame draw, or if you're holding for a longer term, if you have an account that you're available to or allowed to swing on, you could use this as your draw on liquidity, wait it out, and then you'll see that we have actually the SMT get formed at this high with ES as well. So you would likely probably close majority of your position around here. So, and let's look at what that would equate to in terms of R to R. You enter at this breaker, you have a 43-point stop, and then you yield $350 points in profit for about 8R. Obviously, you should partial beforehand, so it won't be full 8R, but you can see the lower time frame opportunity in terms of the intraday scalp and the high time frame opportunity for the swing into the previous daily high. Okay, that's example number 1. Moving on. Right here, Wednesday, October 23rd. Here we have a continuation model. We have an expansion at 1045 lower, trading below previous daily low, as well as this low of Monday. We'll just use previous daily low. We close below it, and then we can observe that this is going to be a mitigation block, as well as this low be part of the mitigation block. This will be true support turned resistance in the form of time-based liquidity. We trade below previous daily low, close below, we use it as resistance or support to trade lower, and we trade through it with an inefficiency. Okay, do we have a lower draw on liquidity? Yeah, we have these relative equal lows resting right here. We have these lows here as well, which is actually from the long that we took previously. This would be a previous weekly low. Now, I won't get into the fact that we have higher time from SMT here, but we do with this previous weekly high. And I believe we had some SMT here as well. But that's beside the point. This is just for a lower time frame play. We see expansion. We want to see internal range liquidity get traded into before a further expansion lower. Okay. Now, this is not going to be internal range liquidity SMT because we see ES trade into the same inefficiency. We also see YM trade into the same inefficiency. What we do see here is actually 15-minute consecutive candle SMT. You could also say it's hourly consecutive candle SMT. Well, no, it's not. I lied to you. 30-minute. Here we have NQ failing to trade above the 1145 high during the lunch macro. We have YM trading above the 1145 high, turtle souping it, trading lower. So now, right, you're going to see the mitigation block on NQ, and you'll see the breaker on YM. It's not always going to be a mitigation block. You will find a breaker within this leg somewhere. It just won't be the liquidity that we form the SMT at. So let's dive into where your entry would be. You could still observe a very obvious breaker here in that we have a swing high, swing low, higher swing high, and then a lower swing low. But it's not what forms the SMT, right? Because this high formed at 11:59, and then at 12:01 we form the SMT. So I don't use 1 minute SMT, by the way. I use 15-minute minimum SMT. So you could really use, maybe you want to trade below this series of BISIs here, this one and this one. and then play an inversion upon closure. Or you just wait for a closure below the breaker and then trade the tap into it like so. And then you have your draws on liquidity, which are below. That, as we know, get tagged. And bang, right? Same idea. That's consecutive candle SMT. That's how you can frame continuations. Inefficiencies along with consecutive candle SMT is a very powerful tool. Okay, next example. That was from the 23rd. Let's go to right here. This is from this week. This week, we can see we formed a low at 9 a.m. trading below this Friday PM session low. We see ES failing to trade below that PM session low. So this will be the low of the range. The high of the range will be Friday's high. We take it once. We have SMT, but it's at midnight. It's not really a key time for me personally. So I'd like to wait till our key time again. You guys are seeing some similarities. 9 a.m., 10 a.m., right? Those are the key times in the AM session. 8, 9, 10, 11 o'clock sometimes. You can find scalps like we did in the lunch macro setup that I just showed you from the 23rd. Right, so we got that SMT with PM session low, 9 a.m., right? You could see the SMT on the hourly. So this will be external range liquidity SMT. It'll also be, I wouldn't consider it internal range liquidity SMT, but the external range is still there on the hourly. Now let's dive into this specific candle. Do the same thing, right? Here's our draw, up at the highs here. Find our breaker. You can go to the 1 minute, you can go to the 3 minute, you can go to the 5 minute. Use the 5 minute in this example. Here's your breaker. Close above this high to confirm it. Lovely. Trade into it. There's your long. Where's your target? Previous daily high. Sure. And take profit, right? Very simple. SMT breakers, they work very well together. I'll release more info on, there's a few other things of criteria that I like to observe to frame SMRs, but again, another video. I have lots of stuff to share with you guys. Right? Now, what does that trade do for us? It takes us to previous daily high, and it actually sets us up for a SMT with ES at this previous weekly high, right? Previous weekly high, SMT, that's a high time frame liquidity level. That means that we're likely going to have a high time frame reversal if we get the proper proof. So we see external range liquidity SMT at the highs, and this is maybe how we can frame a swing short. We take the previous weekly high. It's only right that we can probably target previous weekly low, because as we know, and as I will continue to share with you guys in the future, draw on liquidity is often corresponded, right? SMR forms at previous weekly high. We can thus probably target previous weekly low. The area in which the SMR forms is the range that we use, right? So if we take a previous weekly high, we are working within the previous weekly range. We take a previous daily low, we are working within a previous daily range. You guys seeing how I'm doing that with the previous examples I've shown you? If you don't, rewind and go look, and then I will also release more lectures on that. Here is SMT at the external range highs again in the form of previous weekly high. Let's drop down to see if we can find a breaker. I already know it's on the 30-minute because I cherry picked, and you could judge me all you want, I don't give a shit. Here we have, right? If you look on the hourly, you don't see it, right? You have this new week opening gap here, or this new day opening gap here. You can see that we use it as some level of true support turn resistance inefficiency. Or you could just drop down to a lower time frame like the 30-minute, and you'll see swing. Swing high, swing low, higher swing high. Not sure if this is a swing high here. Don't believe it is. On the lower time frame, you'll probably see one on the 15-minute. But you could use this as your breaker. Trade below it, inefficiency. Sell off for your swing point, or sell off for your swing short. Right? I am not a swing trader, so I do not often do this, but you will see that there is if you go and look in this piece of price action, you will actually find an SMT at the London high with ES at 11:30 with NQ that sets you up short for intraday. So you can go dive into that. Here, what do we see? Here we have a hourly inefficiency. This is from yesterday. Hourly inefficiency. We can see ES trading into an inefficiency as well, but it is the lower one. So we have SMT at our internal range. This is internal range liquidity SMT. Now, you could also see it on the 4-hour. Here is the 4-hour inefficiency. You see NQ trading into it. You could see ES is not. There's some SMT, and that's also consecutive candle SMT, right? Very cool. Now, from there, you could frame a short. This one was a tricky one. You could use 1 minute, 3 minute, whatever. You could just say, well, let's find our swing high, swing low, higher swing high. You could probably just use this down close candle here, or this one. This one kind of engulfs the one next to it. Close below, enter. You can see it doesn't tag into the breaker. Why? Because this is all, this area right here is a balanced price range with this wick and this body and this inefficiency. So it doesn't need to tag the breaker. Just some nitpicky shit. But enter short, you get a monster sell-off, right? Are you guys seeing how powerful SMT is? Every single high probability reversal will have SMT. ICT has stated himself that he utilizes SMT in 99% of his trades. Now, I don't think that's just happenstance. I think there's a reason for it, and I know there's a reason for it because I've seen it, and I know what it's like to not trade with SMT. It's quite literally a nightmare. But that is internal range liquidity SMT. You could also observe it from today, Friday, the 1st of November. We had this inefficiency on NQ. We trade above this 15-minute breaker. We have SMT at the previous daily low with ES, right? Come on now. Previous daily low, SMT. And then we get expansion higher above a breaker. This up close candle from 8:30. We trade into the breaker. And then at 10 a.m., we have YM trading into this 930 BISI. NQ fails to. And I'll bet you your bottom dollar that there's going to be a breaker here. Lo and behold, what do we see? Swing low, swing high, lower swing low, higher high, wait for closure. And you can enter. You could also enter a little bit earlier because we also have a 10 a.m. opening price flip, a true change in the state of delivery. If you guys watch any of my content on Twitter, you'll know that I love using time-based true CISD. But that's a story for another time. And we get quite a nice move from it. You could, if you don't know where to partial, you could use standard deviations of some sort. This one obviously doesn't work, but you could use, I don't know, this guy, take it up to 4, whatever. This isn't a drawn liquidity lecture. This is just simply SMT. But that is how I use SMT, guys, in a very short, sweet lecture. I could talk about this for a lot longer, and I can go a little bit more in depth, which I will later on, but I just wanted to kind of provide you guys with some information on how I use SMTs, because I see a lot of people trading 1-minute SMTs, and there's nothing wrong with that, but you need to be properly aligned on the time frame that you're trading, right? 1-minute SMT may not mean much on the time frame you're trading. That's why I require 15-minute SMT minimum, because it resonates really well with my 1-minute setups. So I hope you guys enjoyed this raw lecture where I just kind of fly by the seat of my pants and not, set up a nice big production where I have Canva open with slides and stuff. Like I can't be arsed to do that for something that I just feel better talking about, more personally like this. Let me know what you guys thought of it. If you want me to make more organized content, you could mention it. I'll take it into consideration or take it under advisement. But yeah, if you guys like it, let me know in the comments. Feel free to subscribe, whatever. Doesn't really matter to me. All that matters is that I show you how I trade, and hopefully it helps you guys in any way. So with all that being said, guys, take care, and I will speak to you in the next video.